You're making good money on paper, but your bank account doesn't feel it at all. You're pulling in something like 80 grand a year, yet your checking balance looks exactly the same as it did 6 months ago, and the only number that's reliably going up is your credit card statement. Rent creeps up, groceries creep up, utilities slip in a small increase, and somehow there's always some emergency that eats the little bit you thought you'd finally be able to keep. It feels like you're sprinting on a treadmill that someone else controls. And here's the part that really messes with your head. The headlines are telling you everything is easing. The federal funds rate, the rate that sets the tone for everything from your car loan to your business line of credit, has already been cut multiple times and is now sitting in the mid-threes, around 3.75%. Inflation has cooled off from the insane peak a couple of years ago, and the latest numbers show annual CPI around 3%, with some measures even closer to the high twos. A 30-year fixed mortgage rate is sitting right around 6.16% nationally, which sounds better than 7 or 8, but it still means you're paying a second house worth of interest over 30 years. So you're hearing soft landing, things are under control, while your lived reality says, I'm getting squeezed from every angle. That disconnect is not in your imagination, it's baked into the system. The official numbers say prices are rising slower, but they never went back down. When eggs go from $2 to $4 and inflation drops, that just means they're sticking around 4, not magically rewinding to 2. Your purchasing power took a hit and stayed there. Meanwhile, behind the scenes, regulators and agencies have been tightening how data is collected and used in small business lending, pushing lenders to rely even more on third-party business credit files, automated underwriting, and detailed reporting. Translation: the game has shifted to reward businesses that are visible and documented in those systems. If your business is just a logo, an LLC, and a dream in your head, the door to real money stays shut. That's where the DUN number comes in. And if you've never heard of it before, that's not your fault. Nobody teaches this. A DUN number is a 9-digit ID number issued by Dun Bradstreet that uniquely identifies your business in their global database. Think of it like a social security number for your company, but instead of tracking your personal credit history, it tracks your business's relationships with vendors, lenders, and partners. We're talking about a system that already has data on over 600 million businesses worldwide, and a huge chunk of big companies, banks, and procurement departments rely on that database to decide who to trust and who to ignore. If your company doesn't have a DUN number, in that ecosystem, you basically don't exist. And here's the part nobody tells you. Getting a DUN number doesn't require you to be a massive corporation. It doesn't require millions of dollars in revenue. A basic DUN number is free to request for most small businesses. The fees come in when they try to sell you on extras, expedited processing, monitoring tools, credit building packages. You don't have to buy any of that to start. Meanwhile, more and more of the small business lending world is being driven by regulatory changes that push for detailed reporting and standardized data, which makes a global ID like the DUN number more important, not less. The system is moving to show me the data on this business, and that data lives in places like Dun Bradstreet's files. Now let's talk about why you feel so stuck even when you're doing the right things. Financially, what you're experiencing is purchasing power destruction, plus a brain wired for loss aversion. The math says your wages grow maybe 2 to 3% a year in a good stretch, while key living costs, housing, insurance, food, childcare, can jump way faster than that. Your brain isn't stupid, it feels that gap. Loss aversion means losing ground hits way harder than gaining a little. So every time you see your rent go up or your grocery bill surprise you, it hurts more than a small raise feels good. On top of that, hyperbolic discounting kicks in. When the future looks rigged, your brain says, screw it, I want relief now. So DoorDash, Amazon, and BNPL apps become little pressure valves. But here's where the just save more advice completely breaks down. Let's put some numbers on it. Say you claw together $10,000 and park it in a basic savings account paying around 0.01%. Over a year, that earns you literally $1 in interest. $1. Meanwhile, inflation is grinding away at 3%, quietly slicing $300 of purchasing power off that same 10 grand every year. In other words, the safe move is mathematically guaranteeing you a slow bleed. Contrast that with what happens when you start playing in the world of business finance the right way. Take that same $10,000 and park it in a decent high-yield or treasury-linked business savings environment, paying something like 4.5%. Now you're pulling in around $450 a year on the exact same money. You didn't work harder, you just allocated smarter. Push it a step further. Imagine you build up your business credit profile and qualify for a $25,000 business line of credit at around 10% interest. If you deploy that capital into something that realistically returns 25% over the year, inventory that you know moves, advertising that you've already tested, equipment that lets you take on more clients, you pay $2,500 in interest and generate about $6,250 in profit. Net gain, roughly $3,750 off money you didn't have to earn through overtime. The whole system is built on compounding. Right now, if you're only playing on the personal side, banks are compounding on you. Interest on your credit cards, rising mortgage costs, increased rent, all of it. The moment you step into the business credit space, you at least have a shot at flipping that, letting capital compound for you instead of against you. But to even get invited into that room, your business has to exist in the data. That is what the DUN number unlocks. So what exactly does this 9-digit number do for you? First, it gives your business a unique fingerprint in Dun Bradstreet's system that lenders, suppliers, and potential partners can pull up when they're deciding whether to extend credit or sign a contract with you. When a vendor offers net 30 or net 60 terms, or a lender looks at a small business application, they're often checking D&B to answer questions like, is this business real? How long has it been around? Do they pay on time? Second, it separates your personal identity from your business identity. Instead of everything being tied to your social security number, you're building a credit history tied to the company itself, which is crucial if you ever want EIN-only credit lines or at least softer personal guarantees. There's also a global piece here. Large corporations, government contractors, and international supply chains use DUN numbers to manage risk and track who they're doing business with. Even though the federal government has moved to its own unique entity identifier, UEI, for official registrations and contracts, that shift did not kill the relevance of the DUN number in the private sector. In fact, it remains a standard identifier in many B2B and multinational setups. If you're trying to land bigger clients, tap into corporate vendor programs, or look credible to companies that actually pay on time and in volume, having that DUN in place is part of the price of admission. Think of business credit like dating. If you show up on the first date emotionally messy, oversharing, and begging for commitment, the other person is gone. That's what you're doing when you roll up to banks with maxed out personal cards, inconsistent income, and a brand new LLC begging for a $50,000 business line of credit. You look desperate, and the system ghosts you. On the other hand, when you set your business up properly, entity form to EIN in place, consistent address and phone number, business email, a simple website that proves you actually exist, and then you add a DUN number on top of that, you're sending a completely different signal. You're not begging for a huge limit on day one, you start with manageable vendor accounts. You pay early, you build a pattern. Over time, your file starts to look boring in the best way, stable, consistent, low drama. That's when lenders start sliding offers into your inbox instead of you chasing them all the time. If you're thinking, that sounds great, but I'm barely keeping my personal credit alive, why should I add one more thing? That's exactly how the trap works. You stay on the hamster wheel of personal credit forever. Slight raises that get eaten by inflation, credit card balances rolling month to month, maybe a mortgage at 6% on a house that feels more like a payment plan than an asset. Business credit is one of the last realistic tools left for a regular person to scale income without endlessly trading time for money. You either start building it now in small, controlled steps, or you wake up 5 years from now watching other people use their business lines to make moves you can't even qualify for. So how do you actually get this DUN number? First, you make sure your business is real on paper. That means your LLC or corporation is properly formed with your state, and you have an EIN from the IRS, both of which are straightforward and free at the tax ID level. You choose a clean, consistent business name, address, and phone number, and you use them everywhere. Bank accounts, website, invoices, registrations. This is important because Dun Bradstreet pulls from public records and other data sources, so if your info's all over the place, your business looks sloppy before you've even started. You also want a professional email, your name at yourcompany.com instead of random hustle123 at Gmail, and a simple website that proves you actually exist. Once that baseline is in place, you go straight to the official Dun & Bradstreet website. No middlemen, no shady credit builder sites charging you $400 to fill out the same form. On the D&B site, you'll see options to look up an existing DUN number and to request a new one. Start by searching your business. You might already be in their database if your company has been around and showing up in public filings or directories. If nothing pops up, go ahead and apply. They'll ask you for your legal business name, trade name if you use one, physical address, phone number, number of employees, and some basic details about what you do. This is not the time to flex or exaggerate. If it's just you right now, put 1. If you're home-based, be honest about that.
Inflating the numbers just makes your profile inconsistent on the road. After you submit, standard processing can take anywhere from a few days to a couple of weeks, depending on your situation and whether you're tied to any special programs or regions. They will absolutely try to steer you toward paid accelerated options or credit management packages. You can skip that unless you have a truly urgent reason, like an immediate contract that explicitly requires a DUNS number by a certain date. For most people, waiting is fine. When the number is issued, you'll receive your 9-digit DUNS, and from that point on, that ID is how your business shows up in the D&B universe. But owning a gym membership card doesn't make you strong, and having a DUNS number doesn't magically unlock $100,000 of funding. The question is what you do next. The first move is to get at least one trade relationship that reports to Dun & Bradstreet or other major business bureaus. That usually means a vendor account, net 30 or net 60 terms, for things your business actually uses: supplies, packaging, software, maybe small equipment. You place small, controlled orders, and you pay them not just on time, but early whenever you can. Those on-time payments get reported under your DUNS, and slowly your profile starts showing actual behavior, not just a shell company. At the same time, you start being deliberate about separating personal and business whenever possible. When a lender, supplier, or application gives you the option to use your EIN and business info with that DUNS number attached, you use it, instead of defaulting to your social out of habit. Over time, that's what moves you toward EIN-only or limited personal guarantee approvals. You're training the system's models to see your business as its own distinct creditworthy entity. And once there's enough clean data in there, that reputation can follow the business even if your personal situation takes a hit. Let's address the mental roadblocks, because this is where most people stall out. Overwhelm is real. Legal structures, registrations, identifiers, reports. It feels like alphabet soup, and it's very intentional. Large institutions benefit when you feel too confused to even start. Then there's short-term thinking. When you've just gotten punched by another bill increase, your nervous system does not care about future business credit. It cares about not feeling terrible tonight. That's hyperbolic discounting in action. And finally, imposter syndrome. You don't feel like a real business, so you avoid doing the things real businesses do, like getting properly identified in the credit system. Then, when lenders ignore you, you take that as proof you were never legit to begin with, even though you never gave the system anything solid to work with. No one is coming to fix this for you. Regulators are going to keep tightening reporting rules and data requirements. Lenders are going to keep leaning on automated systems that decide your fate in milliseconds based on whatever profile they can pull. You either show up in those systems with a clean, intentional footprint, or you get sorted into the too risky, too unknown pile and stay there. That's the raw reality. The way out is not glamorous, but it is doable. Step 1. Clean up your business identity. Make sure your entity status is active, your EIN is issued, and your name, address, and contact details are consistent everywhere you appear. Step 2. Request your DUNS number directly from Dun & Bradstreet. No excuses, no overthinking. Step 3. Open at least one account that reports to business credit and start a track record of small, boring, on-time payments. That's it. Not theory, not motivation posters. Just actual moves that shift you from invisible consumer to documented business in the eyes of the system. You're not behind because you're lazy, you're behind because you're trying to win a 2026 money game with a personal finance only playbook from the 90s, while rates, rules, and data flows have completely changed. The federal funds rate, inflation numbers, mortgage rates, every one of those metrics is screaming the same thing. The old middle class path is fragile, and relying on salary plus a little savings is not enough anymore. Building business credit, starting with something as unsexy but powerful as a DUNS number, is how you give yourself a fighting chance to use leverage instead of just surviving the next round of cost of living adjustments.